Good morning, everybody. This actually will be available on our Discord, our private Discord, Patreon group, as well as Facebook live streaming. So it's the first time I've attempted to do this, where it should be live in both channels, but it should work just fine. If anybody's having it, hit me up on the Discord chat and the Fire General chat. If you have questions, you can drop them in the Fire General chat as well. This is what we do every morning for the Elite live stream. Now, the Patreon members this week are going to get access. Any tier is going to get access to the Elite live streams just to get a sample. And just today, I've decided to do a quick introduction on YouTube. So if you're on YouTube watching this live, if you want to join us, you can join any tier this week and get access to these streams. If you want access to these streams all the time, you need to be on the Elite or the VIP. We typically do a live stream every morning before market bell at 9 o'clock a.m. Eastern. We also do one after closing bell on Friday. We have been doing it 1 hour after closing bell on Friday the last couple of weeks, which is 5 o'clock p.m. Eastern time. So good morning. Today is November 2nd, if you can believe that. Hope you had a good Halloween. It's 9 o'clock a.m. East, a.m. Central. If you're not familiar, we had daylight savings, so some people might be confused. Let's look at generally what we like to do in the morning. We'll look at a few of the stocks that are kind of making some moves. I've got lots of stuff lined up here that we can talk about. These go 25 minutes, and then I do a hard stop because I want to give people 5 minutes to be prepared before the opening bell. So today, if you look at the futures right now, the Nasdaq's up about 0.78%, the S&P's up 1.1%, and the Dow is up 1.4%. So, obviously we had a pretty rough October. Some people probably feeling some pain, but you got to remember where we came from too. We had a huge run up. A lot of those stocks that ran up just basically came back down to where they were. So today we've got Clorox. They had reported quarterly earnings of $3.22 a share, kind of blew it out of the water. The estimate was $2.32 a share. Revenue also topped forecasts as Clorox continued to benefit from purchases by homebound consumers amid the pandemic. Estee Lauder EL, that was a bonus one in the DGIF series. Obviously, it's been it was crushed like everything back in March, and it's kind of trying to claw its way back. I mean, there's two arguments on this one that, nobody's going to use makeup because they're not going to the office. The other, argument is that you're on camera and there's more people doing social media, and, they call it the selfie generation. So it's one of the makeup plays. Marathon Petroleum, we don't really cover a whole lot of oil stocks in Fired Up Group. There's a few people that own some ZOM and some others, but these guys did lose an adjusted $1 a share, which was less than the $1.70 expected. AMC, surprisingly, the operator reported quarterly earnings of $1.32. AMC, I think, is like Walking Dead, and they couldn't record and finish their series for a while. So Lemonade, I know a lot of people like Lemonade. Piper Sandler began coverage on this one and rated overweight, noting Lemonade's technology forward competitive advantage. Waste Management, I know a few people like this one as DGI, earned $1.09 a share. Last quarter, 7 cents above estimates. Revenues also topped. Dunkin' is going to be acquired by Arby's owner, Inspire Brands. They also own Buffalo Wild Wings, if you're familiar with Buffalo Wild Wings, for $8.8 billion in cash, or $106.50 per share. And it's going to make them kind of a behemoth. Nielsen is selling its consumer goods data unit. I'm not sure if anybody follows that one or not. Bank of America, $10 billion of its consumer loan portfolio was in deferral program as of October 21st. GM hired Paul Jackson as the chief financial officer. Sony is close to buying U.S.-based streaming service Crunchyroll from AT&T for about $956 million. Not sure if anybody's familiar with Crunchyroll or not. JP Morgan Chase raised its stake in its China Securities joint venture to 71% after buying a 20% of local partners. That's interesting. Under Armour upgraded to a buy. I'm not sold on that one. Lockheed Martin. Britain will retake control of nuclear weapons contract. Includes Lockheed Martin and Jacobs Engineering. So there's a few stocks. We're going to take a look at some of the ones that we follow in the group here in a minute, like DraftKings and CrowdStrike and those. 5 things to know before the market opens. Let's see here on Monday. Let's see what we got. So I always like to go through this. I'll just read the headlines. So obviously Dow set the jump after its worst month since March. A lot of people might not know that. Here's a chart, daily change in the Dow. You can see the 19th, it's like you go down, you gain a little bit, kind of tease you, go down, gain a little bit. And then we had this huge kind of sell off, a little pop here on the 29th and a sell off again on Friday. And now we're kind of probably going to, go back to where we were a couple trading days ago. Obviously the U.S. election is tomorrow and there could be a lot of volatility. So be prepared for that. Spiking COVID cases haven't been helping the market either. Both U.S. and in Europe spark new restrictions. According to this, Biden takes a double-digit national lead into the campaign, and Trump suggests he might fire Fauci a bit after the election. And number 5, court fights continue over expanded voting options during the pandemic. Obviously, a lot of people are voting remotely. My wife and I are actually going to go to the poll tomorrow, and hopefully that goes well. So, Crunchyroll, yes. Okay, so we are going to look at a couple of stocks and just see how these are doing. A lot of people have been following these, trying to figure out how to dollar cost average. If you don't dollar cost average, most of us like to dollar cost average in. We've been buying things at ranges. DraftKings now is kind of holding that $35, at least for today. This was one of the ranges between 35 and 40 to add shares. And then another range would be below that. The chart showed that it could potentially go as low as like $28 to $30, but a lot of us didn't think it would get that low. If you just look at just kind of a quick glance of this chart on TradingView without doing anything fancy, I mean, you've got these two areas. You can see bounce point here. You can draw pretty much a straight line here at that 35.50 range and another one down here around $30. So, it could always go lower, always, but the projection, if I'm buying in different price points and moving averages and pivot points, I'm probably looking about here, and I'm probably looking, somewhere slightly below $30 in that $28 to $30 range. It may or may not ever get there. The other one that I've been following is CrowdStrike that I've been, buying. I started buying CrowdStrike at 55, and I added a little bit, closer to that 130 range, nibbled a little bit. And my next price point was probably going to be, below that 120, but it might not get there. It's actually trading up almost 1% today at 125. So anywhere in here, it could easily, find its footing and go higher. But, of course, a stock like this that's very expensive, it could easily go to 100 or less if the whole market, kind of collapsed. MRVL Technologies is another one that we've been following the group that, I did some videos on this one. They've got the acquisition with MRVL. If you're familiar, I've got a video on the channel. This easily could go lower too. It dropped down to $35 on the announcement. It was actually down 10% on the announcement of that acquisition. Now that acquisition is not going to happen probably till second half of next year, it says. So, it'll be interesting to see how that kind of pans out. But, I certainly would buy again in that, $33 to $35 range if it got there. I personally think it's a buy here at 37, and that's probably a $50 stock, but there's no way to know. I mean, obviously with anything, there's going to be bears and bulls. There was a Seeking Alpha article over the weekend that was out saying that this was way overpriced and that the acquisition's too expensive, but then some people might look at PE ratios still. I know a lot of you don't. And this thing's, according to this, at least if it's even close to accurate, it's under 20, which would make it pretty inexpensive by relative terms in a market like this, when it has potential growth with 5G, with autonomous, now with, even more so with cloud data center, especially with the MRVL acquisition. So this one does pay a small yield, albeit not very big, and they haven't really grown it. So this stock doesn't really fit anywhere. It's not truly a growth stock because it's not going to form like, it's not going to perform like a hyper growth stock might, like a CrowdStrike or a Datadog. It shouldn't have the growth of those. Of course, it won't. It's been around for a long time. This company's got thousands of different patents. It's been around for 20 years, but it kind of repositioned itself and rebuilt itself a couple of years ago, maybe 5 years ago. New CEO, new management, a couple different acquisitions. They sold a couple divisions that they thought were becoming more obsolete, kind of improved that balance sheet. And I like the company a lot long term. So those are a few of the ones that we're watching. There's others. Those are kind of my my top 3 favorite. I also was buying some Adobe last week, just a little bit of that. Bought some AMD. Adobe is hanging in there. I bought it around this price, maybe $1 more a share. And based on the calculations, I mean, it could go down to, it could always go lower, but it was kind of in that range between where it's at now and $433. So in my opinion, that's probably a decent point to add some shares. And if it went lower, you could always, add some more. And, some people don't like the dollar cost average. They like to try to time the bottom. That can be tough to do when you've got a growth stock that runs real hard. This one's saying a 58P ratio, which it's pretty expensive, but compared to some of the stocks that we look at, it's not nearly as high as some of them. Obviously, this is more of a mature company, and the growth is starting to stabilize. This was more of a kind of a legacy play that, completely reinvented their business to make it more recurring revenue. And you can see companies like Autodesk going through that same process right now with their business model. Microsoft did the same thing. You used to get CDs from Microsoft and install them in your computer. Now it's all cloud-based, Microsoft Office 365, recurring revenue. Obviously, it makes your revenue stream a lot more predictable and stable. You don't have those peaks and valleys, and investors in Wall Street love that SaaS type recurring revenue model. So AMD is another one. Obviously, AMD is expensive. So is NVIDIA. I've owned NVIDIA for a long time. I bought this somewhere below 75, so a little bit lower than here, but it could easily go lower as well. It basically made a run from $50 in July all the way up to $90. Thought the quarter was good. They're going to acquire Xilinx, which I like that company long term, especially for things like MIMO boxes for 5G and data center. But that Xilinx had been performing poorly for a long time, and they did pay a premium. So a lot of people aren't loving that. But you look at like the semiconductor companies, you've got NVIDIA, who's trying to acquire ARM, which would be a massive deal if it got approved by antitrust. It could certainly run into some issues with DOJ. You've got AMD trying to buy Xilinx. You got MRVL buying MRVL. Obviously, MRVL and MRVL are much smaller cap. That combined company is around $40 billion. Whereas AMD is a $90 billion company. But many people might be surprised that a MRVL MRVL acquisition is, getting close to half the valuation or half the market cap, I should say, of AMD. A lot of people might be surprised by that. So I wouldn't sleep on MRVL. Your market cap on NVIDIA is $309 billion. A lot of people would say that NVIDIA could be the next, the next $1 trillion company. And I am long on it. Obviously, it went above 500 and kind of pulled back. But it's made this massive run. If you even look at a 5-year chart, go back here. If you look at a 5-year chart, let's see if I can get this to work. Nope. Okay. That's interesting. But if you look at a chart on this thing, if you go back, here's going back to July of 19. I mean, this thing was, trading 100 has kind of spiked all the way up to that 500 plus, price. So it's made a massive run. But a lot of people think NVIDIA could be the next $1 trillion company. Another one could be Adobe. Obviously it's speculation. There's no way to know exactly. This one's a $214 billion market cap. NVIDIA's, in the 300s. So that's kind of the first phase of what I wanted to cover today. Normally what we would do is Q&A and kind of, people would actually ask, hey, can you look at a chart? Give me your opinion on this stock, on that stock, et cetera. Today, what we're going to do instead, I'm kind of going to give you a sample of all the different things that we might talk about in the morning. So a lot of times we'll be much more focused. Like we might spend the entire 25 minutes just on charts, or the entire 25 minutes on, maybe a technical analysis, tool, indicator, oscillator. We've gone through and done MACD, we've done RSI, things like that. And the cool part is the group in Discord can bring ideas and say, this is what I like to cover. And we've got a team in there that have strengths and weaknesses. That we've got an options group in there on the Elite where we've got a few different options traders. We've got technical analysis, pros in there, a couple of them, and they kind of help with some of their, opinions and charting and things like that too. A couple weeks ago, so 2 weeks ago, Friday, we had a 1 hour chart with our technical analysis, one of our technical analysis guys. Matt, and he spent about an hour going through a bunch of different charts. I think we covered, probably 50 or more charts. And then this last Friday, we had a member, Schmitty, in there who basically retired in his early 40s and kind of had a couple different stints of early retirement, but who is, financially independent, retire early, living on a combination of dividends, fixed income from things like, bond ladders and CDs and some different things. And he does a lot of active options trades. Both of us like to do covered calls. Sanders also in that team that does some different options trading. So we'll do cash covered calls or, cash secured puts, things like that kind of enhance a long-term investing portfolio. So we're not necessarily doing, a ton of YOLO or day trades, but we are using options and things to basically enhance our portfolio, maybe hedge it. For example, Fastly, when it was in the 200s, I wrote Fastly, I had like 400 shares. I sold 300, took some profit, kept 100 shares, house money. I did some cash covered calls. It was probably a month ago, maybe now. And, the strike price was something like $180, and I paid $890 premium. And that same exact contract over the weekend, I looked, it's worth 75 cents. So that's a good way to make some extra money. And, I'm holding those 100 shares long, kind of ride or die. I think, they're house shares, but most of those Fastly shares were in the 20s, and, that thing's pulled back. What the hell is that thing at right now? 64.40 right now. So, maybe it's kind of found some footing, maybe not. I said it could easily go back into the 50s, $55, may not necessarily get there. But the market cap, it literally shaved half of its market cap. It was $125, actually got all the way to 127.70 up here. And that's kind of an ugly looking chart right there. Obviously the TikTok news. So, my thought looking at this quick chart here is, it could basically go to this mark here, which would be in that mid 40s range, but I was thinking it would probably get the mid 50s, but maybe not. Maybe it bottoms out here and starts to climb from this point. So what I want to do next for a few minutes, I want to talk about, and this is something where we might spend 20 minutes on this normally. I want to talk about, should you reinvest dividends? So most of us are long-term investors. We've got a combination of growth stocks, dividend growth investing. Some of us might have some income stocks, some spec stocks. And if you're interested in how I like to build portfolios, there's obviously videos on the channel that kind of show you how to do that. I like to reinvest my, dividends. I've got a couple of videos on the channel, like here's one here for Microsoft, and you can see, the most recent value when I did the video, at least. I'm trying to see what price it was at. So yeah, you can see, and this video was done a little while ago, but 215 shares of Microsoft. The cost basis is 9,000. It's a little deceiving because when you reinvest your dividend, that'll count towards the cost basis. So it says positive 378%, but it's actually more than that if you just look at the initial investment. Because you can see back in 2013 there was $1,900 in there. There's $3,000 in there, and I might have added a few shares back in the December 2018 kind of crash. But 215 shares and, 378% unrealized gain, assuming, and that's not including the dividends. The dividends are rolled in there and they actually kind of count as the same as buying, buying shares. But in my opinion, it's a lot different than actually taking money out of your pocket, buying shares. It's just reinvesting. So you can see how, this can build up over time. You're talking about a 7-year period, where it grew over time and reinvest the dividends. That's kind of the power of compounding and why I like to reinvest dividends. And I like to find what I call dividend growth investing for FIRE. That's stocks where they're not going to just grow their dividend every year, but hopefully they'll also, outperform the market and give you, maybe a 12% or 15% or maybe even higher return. So stocks like Apple and Nvidia and Lam Research and, Microsoft and Honeywell, and there's a bunch of different stocks out there that kind of fit that DGIF model. There's a whole series on the Fired Up YouTube channel that goes through the top 60 DGIF dividend growth investing for fired stocks. But according to College Investor here, it says that here's the times where you shouldn't reinvest dividends, because there's a lot of guys that actually weren't reinvesting dividends. They were taking the dividend and buying growth stock, which is fine. You can do whatever you want. It's your money. And there's a million ways to do everything. So there is no right or wrong necessarily, but it's good to at least get the information and then make your own educated decision. According to these guys, there are some times when you shouldn't invest the dividends you receive in a company stock. These are mostly unique situations or cases for advanced investing strategies, but you should be aware of them nonetheless. So income strategies. If you're relying on dividends as part of an income strategy, say you want to retire early on dividends and bridge the gap between, early retirement and your retirement income being available, like in the US, you might have IRAs or rollovers or 401ks, and there's different, plans depending on what country you're in. Value investing strategies. So if you're a value investor, you understand that price is important. If the price of the stock is higher than your intrinsic value, then you may not believe that reinvesting dividends at that price is an optimal strategy. It may be better to take the cash and then find other value opportunities. So especially if you have larger accounts, there are people that will take, they'll say, well, I'm not going to sell my shares of Apple, but I think it's too expensive here because historically the PE was, below 20 and now it's 30 or whatever. I'm just giving you a quick example. They might say, well, I'm going to keep my shares of Apple, but instead of reinvesting at this higher price, I think it could come down. I'm going to take the cash and I'm going to say buy, if you're a value investor, maybe you're into, Intel or AT&T at these prices or, whatever. And you might take those dividends and buy other stocks that you think are lower than that intrinsic value. So there are strategies that do that. And it can make sense, especially if you have a bigger account and these dividends are significant, it can add up. Warren Buffett doesn't, yes, you heard it right, is all about dividends, but he doesn't reinvest them now. I believe that he used to reinvest them a long time ago, but he hasn't for a long time because he takes the cash and he keeps the cash to follow his value investing strategy. It's very similar to that value investing strategy above, but you also have to remember we're talking about billions of dollars in dividends, so it's kind of a whole different game with Buffett. A lot of people like to try to mimic or compare him. It's kind of in his own universe compared to the average retail investor like us, so I wouldn't sweat that too much. Or if you don't believe in the company, sometimes you don't think the dividends or the company's business model is sustainable. There are sometimes when dividends don't matter and a bad company may be one of these times. If you don't think the dividend is sustainable, take the cash and run. If you don't think the dividend is sustainable, though, for me, why have the company? If this is basically saying there's times where you don't believe in the company or that the business model is not sustainable. If they cut the dividend, the price of the stock's going to fall. So I think at that point, the story changes and I probably just dump it even if it's at a loss, which is why I like individual stocks, in a taxable brokerage. And I like to have ETFs more in the retirement because I can tax loss harvest. For example, Boeing is one that I've had and I probably should have sold it to sell it this week and it'll be at a loss, but it'll offset my gains, which are substantial this year. I've had some pretty big gains that are going to be taxable. I can offset that and get some extra cash and then use that cash to buy something, reposition that capital into something that's going to give me a better return instead of waiting for 2 years for Boeing. So there's that fine line between, aren't you a long-term investor? Yes, but the story changed. And if it's going to be dead money for 2 years, it might be, served better putting that money elsewhere where it can grow. You can always buy Boeing stock back later. That wash rule is only going to be for 30 days. So you could literally sell at a loss, take that loss on your taxes, and you could decide to buy it back. And, depending on what happens with COVID, you might be able to get it similar to the range that it's in now, several months later. So it just depends. We don't have a crystal ball. So that's kind of it for today. That's at 24 minutes. I think I covered everything I wanted to cover. Like I said, normally I do Q&A. So this is just a free example of a live stream. If you want to check out the Patreon, you can go to Mr. Fired Up Wealth Patreon. You can also just go into the video stream channel if you're on YouTube, and there's a link. You can go directly on it. There's 2 promotions this month. The first one is that, as I mentioned earlier, any Patreon tier can receive these live streams all week at no additional cost. The other promotion that we're doing right now, I think it's just till the 7th of November, is the first 7 people that sign up, because we've already had 3 since the beginning of the month. So the next 7, we had 10. The next 7 people that sign up on that that elite tier will get a 30-minute mentoring call with me on the phone. And that's something we normally do in VIP. So if that interests you, we do have a VIP tier as well. But those are the 2 promotions. If you're interested, check it out. Otherwise, have a great day. Make sure you go out and vote tomorrow. And hopefully the market will stabilize. Keep an eye on that VIX, on that volatility. Always have some cash and be prepared. Have a great day, guys. See ya.